Good morning, everyone. You'll have to forgive the scruffiness. I'm in the middle of my end of August planning period, which is when I build out my business plan for September, October, November, December, January, February, March, going into April. So 8 months. Currently doing all of that planning here now. All of the projections, financial projections for next year, all the budgeting for next year, everything is all being done here now. So, a little bit, not really going and seeing folks. I am showing houses. I do have an offer to have to write later on today because the market here, the real estate market here in the city of Windsor is still holding up very, very well. I do have a lot of phone calling to have to do as well too. I have to reach out to many people, but wanted to do this quick video here today to be able to talk a little bit about what happened today and why the market is collapsing. So we had to do this. We have to crush the market to be able to resize it, reprice it for the reality of what's coming. And the reality of what's coming is less liquidity. So since 2008, the Federal Reserve, I'm going to end up sitting down here, but since 2008, the Federal Reserve has been printing money after the global financial crisis in 2008 when liquidity ended. They've been adding liquidity to the system, and they needed to over-liquidify the system to be able to get it to run again, to be able to get it to spurt, to get the engine running again. So they liquidified the system with greenbacks, with US dollars, which trade around the globe. And unfortunately, the problem becomes the falling dollar now, because as there's now billions and trillions and quadrillions of dollars out there, the value of a dollar that's there is suddenly less. So if you want to buy a barrel of oil, you need more dollars. And that's what Saudi Arabia said yesterday. They said, look, we see the dollar falling further. And we believe that the price of a barrel of our oil based upon dollar notes should be higher. So we believe that we should cut our production to force the barrel of oil higher in markets. And they're spot on correct, because that's what's happening today, is the dollar is falling, which makes our exports cheaper, or the U.S. exports cheaper across the global marketplace. That's fine. So the U.S. economy, the industrial side of the U.S. economy, should do very well, especially since the Chinese economy is faltering like a rock in a quarry. And so Chairman Powell came out today, not in that way, but he came out today and he simply said, look, I'm going to hold my organization to the fire to continue to keep raising interest rates rapidly, to be able to continue to keep drawing out liquidity from the system, to be able to fight back the sinking dollar now, and the concept that we have way too much liquidity in our system. We must take the liquidity out of the system. But then you have a president of the United States that's adding additional liquidity into the system. And whether that's going to be done or not, his college savings plan, thing where he gives everybody $10,000 or $20,000. The president doesn't have the right to be able to do that in the U.S. Constitution. That has to be an act of Congress, which is the House and the Senate must come together to be able to do that. And so we'll see the legal challenges that will have to hit the Supreme Court, because it is a constitutional question. And so all of those things will take time to work out. So it's not like it's going to be something that's going to hit right away anyway. And then we've got the midterm elections coming up as well, too. That will squash everything if the Republicans gain power in either the House or the Senate, which it looks like they're for sure gaining in the House, but we don't know about the Senate as of yet. So When we look at all of this, Chairman Powell has one job. He's non-political. His job is to make sure that liquidity is right in our system. So we were always going to have to hit this day of reckoning at some point in time. We were always going to have to take out the liquidity from the system. The U.S. savings rate dropped again, which is taking liquidity out of the system. We, the people, are the system. The more liquidity we have, the more we spend money that's printed from printing presses with no financial backing, which just creates another inflationary problem. So when the government gives us free money, when the government gives us money like they did in the pandemic, this creates inflation because it's free money. And when they come out with programs like the PPP, and there's so much rapid squandering or cheating or anything in that system, I mean, they gave away billions and billions and billions of dollars. They created all kinds of liquidity from the printing presses and said, here you go. This stuff's worthless anyway. Go ahead and take it all. Okay? And so there was so much cheating in the system. So many people feel that they're rich. Gee, I got $1 million in my bank account. Okay, great. But what's that $1 million actually physically worth today compared to what it was worth yesterday? That's inflation. So at the end of the day, the chairman came out today and kept crushing the bug. He said today that I will continue to keep raising interest rates until the target rate is down to 2%. Pretty clear stuff. So until inflation is down to 2%, he will be crushing us with higher cost of borrowing money. If you can't borrow money, then suddenly your business closes because, gee, I don't have any money to continue to keep running my business. And that's why borrowing money is never a good thing. Trying to get out of debt is always the best policy because it doesn't impact you then when some guy in Wyoming goes and decides, I'm going to crush you like a bug. So the key sets that everybody should be learning from all of this is always look at your own person and get debt free. It's the only way. If you look at my projections for our budget here in our household, and you compare them to 2019 when I did budgets for looking forward, here's where we're going to be. We are spot on with exactly financially where I said that we would be today. That's why I can do these videos. So get debt free. It takes a lot of work. But if you're debt free, then you do not have to worry about any of these things. It doesn't matter what interest rates are because you're not paying them. All that matters is what your utility costs are and what your property taxes are and what your income actually is. But when you don't owe $1,000 a month in interest, then suddenly those things don't matter anyway because you got $1,000 that you don't have to pay to the bank that you could go ahead and pay to the utility companies if you needed to or to the tax man if you needed to. So the same old adage of what your grandma used to do is exactly still the same today. It has never changed over time. We just keep thinking that, oh my gosh, we should change this. Oh my gosh, we should go and live like nobody else by spending money. Instead, the adage is live like nobody else so that later you can live like nobody else. Earlier in 2019, 2018, we were living like nobody else. Now, suddenly in 2022, we're living like nobody else that we know. We don't have debts. We have paid off cars that are sitting there in the garage with 25,000 kilometers or whatever the heck on them. And they're really, really awesome cars that don't need to be replaced. So at the end of the day, the same story holds true. Do not ever allow the Federal Reserve Chairman to determine the path of your life. You determine that. Get debt free. No matter how much liquidity, the credit card company keeps sending me notices every month. Dear Mr. Price, because you love us so much, you can go ahead and have more money. Okay, fine. But I just throw those away. I shred them actually. But I don't need more money. I have more than enough liquidity in my own system to be able to do anything that I want to do. And that liquidity is growing every single month because now we're suddenly saving a ton of money. As the market drops, we're buying stocks at a discount. Woo! Maybe. Right now, we're actually just sitting on cash because cash is a good spot to be right now. Even though that cash is going lower every single day, technically, it's just the market is going to be going lower faster. So when we think about where I am at with trying to help you manage your money, I don't put a lot of pressure on that because I've seen the concept that today we're going to have a bloodbath and this is going to get bad. We must reprice this market. The spreadsheet, I'll go run that. I'll do another video on the spreadsheet to tell us what to expect. But we know 32.2 is in the cards. We know that already. I've already done that video. I've already said 32.2. Dow 32.2 is in the cards. Now, what we have to see is when we get there, where do we go from there? Do we go to 31? Do we go back down and retest the lows to 29 on the Dow, 29,000 on the Dow? Now, Art Cashin, who is a very old floor trader in New York City, who has seen all kinds of stuff, said today, I do not believe that we will retest the low, but we have lower to go. So we'll see, based upon the data sets, when I run the spreadsheet, what that's going to even look like. Do we go lower than 32.2? We'll see that all in the spreadsheet. It'll show us in the spreadsheet. It will be there. It will say, hey, here's where we're going to. We're 31.8, 31.6. So for now, I believe that money, free money, extra money, just should be in cash or in a bond if it has to earn a little something. And then we move it into your TFSA, into your retirement account, extra money that you otherwise don't need after you're debt-free. Get debt-free. Get debt-free. Get debt-free. If there's anything that you could ever learn financially from me that is saving my butt today, it is get debt-free. As you look around and you see everybody borrowing money, you think, gee, everybody's borrowing money. I should borrow money too. Don't be like everybody else. All of those people are going to be putting their houses up for sale and having to downsize because they upsized when things were good. And now that things are bad, they're going to have to downsize. It's just a natural progression. Now, luckily here in the city of Windsor, last part of this, the saving grace that we have in the city of Windsor for all of us that are blue collar or even white collar workers is that as long as the city of Windsor's budget is holding up pretty well, they can continue to keep hiring. As long as there's students in our system, the university and St. Clair College can continue to keep hiring. As long as there is government money coming in with new electric lines, because we're running out of power down here in Windsor, Essex County. We've been the butt of Canada for a long time. We need as much power as we possibly can get to be able to open up new businesses down here that are otherwise going to need to use power. The battery plant is one of them. The chemicals plant is another of them. We need power down here. Luckily, the government is going to be bringing it to us. The other thing that we have is that we must get the battery plant building. Because as soon as the walls or the footings or the foundations start to go up, then that's 5,000 plus other supplier jobs. So we need to see that. Also, we have the bridge being built, which is a $1 billion bridge as well, too. So there's tons of Windsorites working on the bridge. That's a good thing. So all of those things insulate Windsor really, really well as long as students continue to come back to university. Now, there's a trend right now that students are not going to US universities. They're dropping left and right. Now, if that trend continues because the cost of living goes up, the cost of borrowing goes up, the cost of everything goes up, and there's less money to be able to send your kids to a college or a university, then Windsor kind of stands to benefit a little bit of that because the exchange rate US students coming here, they get a 30% discount. So at the end of the day, Windsor is in a position to be able to be pretty strong. And if in 2024 Donald Trump happens to get reelected, then the city of Windsor stands to benefit again by him being elected because all of the young kids hate him and will not go to a university in the United States. They will go to, at least the international students won't go into the United States. They will only go into Canada. And Canada stands to benefit. University of Windsor stands to benefit as well, too. So those are the kinds of trends that we're seeing. Those are the kinds of things that we're seeing. Those are the kinds of things that are concerning to me right now. Hold on to your hats. The market is moving lower. We always knew the market was going to be moving lower. This spike up that we had in July was just completely unfathomable, and I've done video about that. And when markets are completely irrational, they give back. Eventually, they give back. So I'll run the spreadsheet when I have a little bit of a chance today. I've got some paperwork I've got to get processed, and I've got some more planning they have to do this scruffy stuff. I'm in the middle of my end of August planning for September, October, November, December, January, February. And these are typically the busiest months of the year for me. So anyway, thanks for watching. But batten down your hatches, try to use some extra money that you have. If you're working a little bit of overtime, apply it to debt. Take the smallest debt, at the very least, do one thing. Take the smallest debt you have and eliminate the damn thing. Just get rid of it. And start snowballing that little bit of money. I don't care if it's $50 a month you pay extra on debt. Just do something to get out of debt. Thanks for watching. Have a great day.